So I set out to find more about the negotiations behind the Apple Card, big splashy announcement with Tim Cook taking the stage back in March. What we learned, and every person I talked to was like, I do not know how Goldman's going to make money on this thing.
Yes.
And specifically, we learned that Citigroup was in advanced talks with Apple on this. They were going to talk about spinning out their app. And basically what they came down to is like, we don't know if we're going to be able to make a profit on this, and they bowed out of that negotiation.
So this is interesting because it suggests that working with Apple is not enough of an allure for the company, in Citi's case, to make this a loss leader.
Right. I talked to people who made some of the biggest deals in the credit card space in the past 20 years, and they said whether it's Costco, whether it's some other big deals like Walmart, basically, who has the leverage in these deals, right? Is it the retailer? And the retailer owns the customer experience, owns the customer loyalty in this case. Or is it the financial services company? Sometimes fin services companies get into the deal, and they don't start making money until year 7.
Wow. And so we know for some cards like JP Morgan Sapphire card, the ones that have the really good perks, so the way to kind of be the top card in the wallet is often by losing money at first and hoping to make it up over time. So in Goldman's case, why were they willing to take on the financial risk that Citi was not, especially for what you say is their first credit card?
A couple of reasons, right? They're trying to bootstrap this big consumer retail, digital service, right? And so who better to start this with if you think that this is going to be the first of perhaps 7 to 10 partnerships over the next few years as they try to scale up in financial services, in consumer financial services, who better to start with than Apple?
What are the real differences here? The innovations, the reason, and it is interesting to watch Goldman in this transition from very straightforward, great legacy investment bank to we want to go compete with the biggest consumer brands in the country.
You talk to Goldman execs and they use the word TAM a lot, total addressable market.
Oh, boy.
Huge total addressable market, and they're going after it. So basically, when you look at the card, no fees, right? No fees of any kind. That's a huge reason why it's going to be harder to make money. Lower interest rates that are arguably a few basis points, a few hundred basis points below the average. And then most of all, software that proactively tells you when your bills are due. This is not new stuff, but the user experience is probably going to be the best with Apple. Proactively wants you to pay down debt. And when you think about how cards in the industry are kind of structured, it's almost as though you fall into an issue where you get into debt and it's harder and harder to get out. They want to avoid that whole deal.
Yeah.